Hello and welcome to Morningstar. Joining me today for Why Should I Invest With You is Guy Anderson. He's co-manager of the Mercantile Investment Trust. Guy, thanks for joining me.
Morning.
So let's start off, looking sort of at a more kind of macro, holistic view. You're investing primarily in mid and small caps. If you look at the performance of your trust, it's perhaps been a bit volatile year from year. Would you say that's a typical characteristic of investing in this area, or is it something to do with the sort of the process that you're applying?
I think it is characteristic of investing in the mid and small cap part of the market, but I think the key thing to remember is that over the long term, UK mid and small caps have significantly outperformed their larger cap brethren. So for example, if you look at some of the Numis data since 1955, the magnitude of the difference is quite frankly astonishing. Whilst mid and small caps don't outperform every year, over that period they have outperformed in 2 out of 3 years, and that's something that we think can continue going forwards.
So you've been co-managing the fund now for, I think, 3 years. Now, round about when you joined, the process was changed slightly. Can you explain a little bit about what's changed and how that's impacted the fund?
Sure. The underlying investment philosophy that we follow hasn't changed. We ultimately are looking for attractively valued companies that operate in positive end markets with good dynamics. But what we have done is we've expanded the team somewhat. So we've gone from a 2-person team to a 4-person team. And that gives us greater time to focus on the individual companies in which we're investing, and thus be more analytically rigorous on our work and spend more time doing the important due diligence in the companies.
And so when you're coming to actually try and identify these attractive stocks for your portfolio, are there any particular sectors within the mid-cap, small-cap area that you typically look at, or perhaps that you're finding interesting at the moment?
Sure. So I think the first thing to say is overall there are no sectors that are no-go areas for this portfolio. So we will invest across the full range of industry sectors. However, at any individual point in time that will vary, as there will be some sectors that we think are more attractive than others, clearly based on the bottom-up stock selection that we perform. When we look at the portfolio today, we're very skewed towards the consumer services sector, where we think there's a positive long-term dynamic, or short-term and medium-term dynamic, but we're negatively positioned in the more commodity-facing industries, such as the oil and gas companies, the metals and mining, and indeed the industrial companies that are servicing those industries.
So given those sort of sector dynamics, obviously investing in funds is for a long-term investor. What sort of view or investment horizon would you typically expect an investor to have to sort of stomach some of that volatility that you get investing in this area?
Absolutely. I think this is a long-term investment vehicle, and that absolutely suits the investment trust characteristics. When we make investment decisions at a fund level, we're typically thinking about a 2-year investment horizon, albeit it can vary. We've got companies that have been in the portfolio for more than a decade, and we've got companies that will come in and out as facts change and the investment conclusions change. As far as end investors investing in our portfolio are concerned, I think the longer the time horizon, the better.
Guy Anderson, thanks very much for sharing your insights with us.
Thank you.
For Morningstar, I'm Holly Cook. Thanks for watching.